Today I would like to take a look at the Euro Great Britain pound, and we'll try to analyze this move in here, this being a daily chart, and we'll try to analyze what this move is. The recording, it is being called the Euro Great Britain pound possible end of a fourth wave correction, and that is of a higher degree. So this is a daily chart, but if you click here on the weekly chart, this is possible, this structure in here, it is possible to be a fourth wave correction that is done in here, but that would be something like 4, like this, and let's make it of a higher degree. Let's put this one as being magenta, and this would be the purpose of another recording. We'll try to take a look at this move in here, starting from this moment of time, so starting from this low into the 0.7751. So we'll go on the lower degree, so on the daily chart like this. So these are the lows we said on the 0.77, and we'll try to look at what this move looks like to the upside, and if we have any clues regarding future price action. Now, from my point of view, if this is the end of the fourth wave, regardless what was in here, I would like to take into consideration the time element, so that we know that we are looking from this moment on the right side. And as you can see in here, we have a clear structure of 1, 2, 3, 4, 5, and this structure resembles to be a leading diagonal. Let's just put in here the numbers as this being the first wave. Let's make it red. Then the second wave in here, and the third wave in here. This should be normally the fourth wave, and the fifth wave being down here. And this whole structure ends in here with a wave of a higher degree, normally wave 1 of a higher degree, and let's make this one dark orchid like this. Now this structure in here that you see in here with 1, 2, 3, 4, 5 waves to the upside, 5 red waves to the upside, it is being called the leading diagonal, and the leading diagonal has the following properties. There is the corrections are quite abrupt. I mean, they correct quite a lot of the previous wave. You see the second wave in here correcting quite a lot out of the first wave, and the fourth wave in here correcting also quite a lot. And another common thing for the leading diagonals, if you take a trend line from the top of the first wave and trying to connect the top of the third wave like this, so this should be a trend line. Let's just put it, let's make it black and like this. And the fifth wave, while still making a new high compared with the third wave, should not pierce, usually and normally should not pierce this trend line draw like this. This is a leading diagonal, normal for a wave 1 type, and it should mean exactly what it means in English. So just translate the term leading diagonal, that is, it leads towards more accelerated move to the upside. And if that is the first wave, then this is the second wave. So we have a structure in here in the form of 1, 2, and looking for something else to come to the upside. Now, in terms of looking at this move from here, if this is going to be an impulse to the upside, then what we need to do is to check the expansion. If the third wave is higher than 161.8% extension, then the third wave is extended, and that the rules of an impulse are respected. So let's take a Fibonacci expansion from here and try to see if the 161 extension is being touched, and we are seeing that this is the level for the extension, 161.8, and this is being, let's put a number on it, 0.8636, and the highs in here, let's try to mark the highs in here so that we know all the time what we're looking for. So the highs in here are 0.8813. Now if we have the first wave and the second wave, we might have that the third wave in here to be done, already extended, and looking for a fifth wave type. So if you take in here, that should be wave 1 of a lower degree, then the second wave. It is very much possible that this structure in here to be a pattern within a pattern. There is a wave 1 of an even lower degree. So to have a 1, the second wave in here, the third wave in here, and the fourth wave down in here. If you take a Fibonacci retracement tool and try to measure the distance that the fourth wave corrects out of the third wave, normally it should be somewhere between 38.2% retracement or 50% retracement, and you see just by looking at this, judging by the eye, this is something like 38.2–50% retracement. So good level for the fourth wave, and this to be the fifth wave. Now a measured move of what, or a target for a fifth wave to the upside should be, and in this order, 61.8 out of the first wave in here. You can see that clearly this is not the case here, or 100% of wave 1, not the case here, or even 161.8 extension out of wave 1 out of the first wave. So this might be the case in here. So we might have 1, 2, and the third wave red to the upside to be done, and then we're looking for a fourth wave, and there you go, you have the name for this recording, possible fourth wave correction done on the daily chart. Why? Because a typical retracement for the fourth wave, starting with the beginning of the second wave and place it like this, a typical correction is coming somewhere into the 38.2 and 50% area, and if you take a look at the exact level the price has turned in here, it is something like 84.24, and let's mark it a little bit, and the shaping, put a shaping here. There is something like 50% retracement. Take a look in here, 50% retracement of this whole move. So we might have a 1, 2, the third wave, and then the fourth wave to the downside, and trying to build power and to challenge the recent highs in here. We also have some other bullish elements in here, but this is a higher time frame, normally visible on smaller time frames, like this one in here, resembles this pattern in here, resembles of an inverted head and shoulder, with the left shoulder in here, right shoulder and the head, and the measured move should basically come and close the gap. We are still having the gap from the Cyprus move open, so we're looking for the gap to be closed also. So why not closing the gap? The euro dollar has closed the gap, cable closed the gap, Aussie closed the gap, so looking for this cross to actually come and finish this pattern too. So you have 1, 2, 3, 4, 5. What I will still do on this chart, I will take a trend line from the originating move for the impulse and to the second wave and put it like this, and let's make this trend line okay, something like this, and let's make this trend line a little bit visible like this, and this is the trend line of the impulse, and look for it to hold as long as the impulse it is still valid. By the moment the trend line from the second wave and the fourth wave is being broken, then we will have to reassess. But as it looks in here, we might have the possibility of more upside to come. So 0.88 recent highs, at least towards the gap closing, and that would be something like 86.26. We're looking for the price to go up, and that should help our euro dollar bullish scenario as well. Until next time, take care and stay